The Celsius network and other spread businesses such as BlockFi have been a great way for hodlers to earn some additional crypto by simply depositing their stable coins or any other crypto such as Bitcoin, Ethereum or Cardano in return for a certain percentage yield. I just opened a Celsius account recently just to see what kind of returns that I could earn, and for example I can earn 3.51% on Bitcoin, 5.35% on ETH, then 8.88% on USDC, a stable coin. There's lots of different cryptos listed on the network here as you can see, and it goes up as high as 17% in some cases. How Celsius can afford to pay you such high interest rates is basically whatever you deposit onto the network, what they will do is they will take that cryptocurrency and they will lend it out at a higher interest rate to who they say are institutions. So in today's video, what I'm going to do is to take a look at some of the risk factors that you should be aware of before you go ahead and deposit your crypto onto a network like Celsius or BlockFi or any of these other ones. Based on your risk profile, then you can decide for yourself whether the interest that you can earn on the Celsius network is actually worth whatever risk there is that you might eventually lose your capital. The first and biggest risk factor that I think the Celsius network has facing them is their mortal enemy, traditional banks. They see these networks like Celsius offering customers up to 8.88% interest there on stable coins when they are only offering their customers a little over 0% interest on any deposits that they have in their accounts. Naturally enough, a lot of money is starting to flow out of traditional banks and filter its way into networks like Celsius, and the banks are getting a little peed off. They can't leave this to continue to grow at the rate that it is already growing, or else they will lose a serious amount of their customer deposits. And banks can't survive without these customer deposits. They need these deposits in order to lend. The one thing that the banks have in their favour is that they have billions and billions available to lobby governments to try and shut down operations like Celsius. We've already seen many shots fired, with Celsius being issued cease and desist orders in a few states in the US. Now nothing may come out of this, and Celsius are not the only ones to have received such threats. BlockFi and Coinbase have also seen some similar threats in recent weeks as regulators start to throw their weight around, but it is obvious that it is the banks who are the ones that are pressuring them to do it. And Celsius have been preparing for battle. They raised 400 million in capital earlier this month to get them ready for anything that comes down the line in terms of regulations. It will be interesting to see how this develops and whether Celsius can keep them at bay or not. The one worry that you would have is if there was some significant ruling against Celsius, that this could threaten the ability of Celsius to continue and they may end up freezing some customers' accounts. But hopefully the chances of something like this ever happening is very small. The next risk that you should be aware of is as soon as you deposit your crypto onto Celsius, you lose custody of those assets. And at that point, Celsius, according to their terms and conditions, can do pretty much anything with those assets. So here is what it says in the Celsius terms and conditions. We may lend, sell, pledge, hypothecate, assign, invest, use, commingle, or otherwise dispose of assets and eligible digital assets to counterparties, or hold the eligible digital assets with counterparties, and we will use the best of our commercial and operational efforts to prevent losses. But who knows what could happen? There could be some huge errors that could result in Celsius being unable to repay you your deposit, or else giving you only a fraction of what you deposited back. And unlike having your money in a bank, you are not protected by a deposit guarantee scheme or any investor protection scheme when you have your money deposited on Celsius. So this is just something that you need to be aware of. However, Celsius do say that they have safeguards in place, and that for any money that they lend out to institutions, that these loans are over collateralized at up to 150%. So if the borrower defaults on their loan, there is plenty of collateral there to cover it and protect the network. Although Celsius is independently audited, we don't really have any precise details on how much collateral there really is, or any details on who they are actually lending the money to. Reports surfaced earlier in the year that a custodian of Celsius actually cut ties with them because they were rehypothecating assets. Rehypothecation is the practice whereby banks and brokers use for their own purposes assets which have been posted as collateral by their clients. So basically they were accused of reusing collateral that had been given to them by borrowers to try and finance more and more loans. If this were true, you could see how if a few institutions defaulted on their loans, then the whole network could easily collapse. But the CEO of Celsius, Alex Mashinsky, said this was not true and they had simply just changed their custodian provider because of poor service. So to this day, really, we don't really know who was telling the truth in this situation. The truth more than likely lies somewhere in the middle. Celsius have tried to lure in customers that may be worried about these counterparty risks by saying that they are going to offer self-funded insurance in the future. They tweeted about this back in February, and we were expecting to see this go live in the end of this year or else in the first quarter of 2022. So how we expect this to work is you will contribute a small bit of your interest towards a pool that would protect you in the case that any of the borrowers default on their loans, and there's a pool of funds there then basically to try and protect the customers. Currently on the app they have a section where you can opt in for this insurance and be notified when it is available. At the moment, the only insurance there to protect you is ones taken out by Fireblocks, their custodian. So their custodian basically holds onto any crypto that is not lent out and protects it. So if there was a hack, for example, and the custodian lost all of the crypto, then you would be covered by insurance in that case. But this is probably only a minority of the crypto assets, as you would expect the most of the crypto would be lent out to institutions. So they are pretty much the risk factors that I wanted to go over. Let me know what you think yourself. Do you use Celsius, BlockFi or any other service to try and earn a bit of interest on your crypto? Let me know in the comment section. My own personal thoughts on it at the moment are, I don't know for myself anyway if the interest that I'd earn on my crypto is actually worth the potential risk of losing it, even though the risk of something like this happening is pretty low. But we never know what could happen. So that's pretty much it for today's video. Thanks very much for watching. If anybody is new to the channel, I would really appreciate it if you subscribe to keep up to date with all of my latest videos. I'll see you guys again next week.